Hi, this is Matthew Cratter from Trader University, and today I want to answer a question that I've been getting from many of my readers. And that question is Donald Trump bad for dividend stocks? So many of you own stocks like Coke. We can see a chart here. This is the election right here, Tuesday, November 8th. And you can see Coke is down quite a bit since the election. We could look at some other dividend stocks like Procter & Gamble. Same thing, Colgate-Palmolive. Now, what's happening here basically is that in the wake of the election, interest rates have moved up. So if we take a look at the 10-year Treasury yield, we can see that the yield on the day of the election, 10-year Treasuries were yielding about 1.86. They've moved up to 2.48. So quite a large move up in interest rates. And at the same time, the dollar has strengthened, and this is often a result when interest rates rise, the currency tends to strengthen. So we can see here since the election that the dollar has strengthened against other currencies. And what this means for your typical multinational blue chip dividend paying stocks is that they tend to go down short term when interest rates rise, or the expectation of interest rates rise, and when the dollar strengthens. A weaker dollar means that they'll be making more abroad, and when they convert that to dollars, their earnings will be higher. But there's actually something else going on here. So many of these stocks like Coke, Procter & Gamble, Colgate-Palmolive, they're what's called consumer staples. So we can look at basically here's an ETF for consumer staples, and you can see it's down quite a bit since the election. But what these consumer staples have in common is they tend to pay out quite a bit of their earnings in dividends. And so they tend to function more like bonds. And what happens to bonds when interest rates go up? When interest rates go up, bonds sell off. So many of these stocks, like for example Coke, it's a fairly slow-growing company at this point. It actually functions more like a bond. And so when interest rates go down, there's a tendency for the stock to rise. And when interest rates go up, there's a tendency for the stock to fall. So the short answer to the question, is Donald Trump bad for dividend stocks? In the short term, he certainly has been, just because of the effect on dividend, on interest rates. Long term, though, I don't expect this to last. I don't expect there to be any long-term move up in interest rates. I think we're still in a very long-term interest rate world. And so I think it's actually some of these stocks are looking fairly good at this point. KO, Coke, Procter & Gamble, Colgate-Palmolive. There's a lot of money that's been flowing into industrials, into financials, and money flowing out of these more interest rate sensitive stocks. So the short answer is Donald Trump bad for dividend stocks? In the short term, possibly. In the long term, I don't think it's anything to worry about. I think he's a very pro-business candidate. And to be quite honest, I think people continue to use Procter & Gamble's products and continue to drink Coke no matter who is president. Thanks very much for listening. Check out my courses and books, traderuniversity.com. And please subscribe to my YouTube channel, so you'll learn as soon as I release my next YouTube video. Thanks for listening, and I'll see you in the next one.